We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up LW. We are on the 12-month time frame. Price action, last candle to the right-hand side is a bullish green candle. Still active, still have a chance to grow or maybe reverse. And also we want to see that price action candle engulf that fourth to last candle huge doji to really identify that market's going to push up further. If not, it can be coming down. So we do have price action, overall higher highs of structure. Price action, overall lower lows of structure. Adding the midpoint, also adding second level lows, and also adding second level highs. Current price is sitting at 96.03. So if price work is way down, it can tag that support line at 85.72 before tagging that midpoint in that area at 91.03. If price drops down further, it can head down to the next support line at 79.78 before tagging the following midpoint at 82.84. So let's take a look at what's going on in the market. So we can see that the market started off at a low. So when that market pushed up from the price, second, third to fourth last candle until it created that that overall resistance with red and green, market really had no support. So with just a clean push up, we'll see support as we walk down the time frame. So if this market pushes up further, when that market spiked up to that high, market came back to retest, which identified the first leg. Market pushed up for the second. So we can see that the price action is a retest. That's why I have a little spike down to low that candle, and it follows. It can push up with momentum with this following candle for that W formation. It may have to follow up with another candle to create that W incline. If that market drops down, it can drop down from this area here. So if so, the first spike up will be the first leg, second leg, third leg. Market's coming down from that double top, or we can receive consolidation at that high. Also, we can see that you want to see price action break out of the fourth to last candle wick to that top side. So let's add another SR line. So we're looking for price to break that area. And once that market breaks that resistance line, we're looking for the break and retest to see if that market's going to push up further. So anything within is a lot of momentum that can be traded or invested in this market. So if price action was smaller, if it was a smaller candle or smaller angles, then you'll be looking for the breakout of the fourth to last candle to the top side as we put that yellow SR line into the bottom side, which will add SR line. So anything within that area will be consolidation. Working our way to the 6-month time frame, we can see why it's a consolidation, because before we get to price action, we can see that the third to last candle, fourth, fifth, sixth, seventh, eighth, ninth, 10th to last candle in the market are all side by side. Yes, we do have a few highs in here, but everything is at a low level, which is tagging that overall lowest low. So if this market pushes up, so price action, 6-month time frame, small bullish green candle. So if that market pushes up further, it looked like it closed out for that W formation at the overall highest high, because when markets pushed up from this area, came back to retest, we did receive that first leg, second leg, third leg, fourth leg, retest, market pushed up. So market's coming from a double bottom and retest. We did receive the break with the price action candle. So we're going to see if it's going to push up further and break the resistance line, unless it's going to consolidate sideways in that area, or it may just reverse in that area. And if it reverses that area, it will look like this. So we have the overall spike up to the high to the left hand side, and price action will be another spike up. So that creates the first leg, second leg, third leg. If it follows up with a bearish red candle and pushes down, we'll see that M pattern. or price can consolidate at that high area of overall highest highs. Working our way to a 3-month time frame, price action bullish green candle. What is the market reading? The second last candle has pushed up, broke, price action retest, and had momentum and pushed up to that resistance line. So we're looking for that break of that resistance line unless it's rejected at the resistance line. Headed down to the monthly. Price action, the monthly, we have the price action monthly spike down to a low, huge size candle, very large. What happened is that the fourth to last candle has pushed up. Second to last candle came back to retest, still had momentum to push up again, but only made it to the previous side of the fourth to last candle, consolidated sideways with a little bit of momentum, and then the price action was formed, spiked down to the low, and it created that push. So let's draw it out. Market created that first leg, second leg, third leg, fourth leg, retest, and market pushed up. So market is coming from an incline, double bottom, and a retest, or incline pattern of a staircase pattern, working its way up 3 times. Working our way to the weekly price action on a weekly bullish green candle. So market has reached that area, near that area of resistance. We're going to see if it's going to break, or is it going to consolidate or drop down further. Also, we did receive the break of the white SR line sitting at price of 91.03. So let's identify, let's draw something out. We can see at that low how this market got here. When that market drew out that break, retest, first, second, third, fourth, retest, one, retest, and we are on the second push. So we're going to see if that market's going to continue to push out, or is it going to retest maybe up to the midpoint line or consolidate sideways before pushing up further. Working our way to the daily. So we have a gap in the market here. So let's read why that gap happened, or why price action's at that high. Multiple pushes down to low, just paying attention to overall. First, second, third, market pushed up. Gap in the market, price action, bullish green candle, more like a large doji, long wick up to the top, long wick up to the bottom. So the bottom is more longer than the top. So is identifying that price could be identifying a spike down to that midpoint between the yellow line and the white line. So while we're on this area, let's add a midpoint. And let's walk down the time frame, 4-hour time frame, price action, bearish red doji cross, indecisive, side by side with the second last candle being a large doji as well, with a spike down to a low. So the market is reading that it pushed up, spiked down, pushed back up, and consolidated sideways with price in second. So you're looking for the engulfment to the top side of the second last candle, or the bottom side of that second last candle to push that market, or that market's going to push up or down. Also, we know we're in a zone area. So going a little bit above the zone, going a little bit below the zone. Let's take a look at what's happening. So right now, price is sitting on top of the zone. When the market broke through that zone, it broke through, retest, and pushed up. Still consolidating sideways. Price action, 3-hour time frame reading as a bullish green candle. So it looks like more of a retest with some momentum. So, or it could drop down from a double top and retest, because the second, third, last candle will be identified as 2 spike ups to that high, which creates that double top. Market return back to the midpoint. It still hasn't engulfed the second or third last candle. So market could be coming down from a double top and a retest. We'll see that bearish red candle drop that market. Headed down to a 2-hour time frame, starting to create a little bit of structure. So we're starting to see when that market did spike up with that fourth to last candle, that's a retest. So there's a gap in the market. So imagine green candle came up, fourth candle came back to retest, third candle pushed up, second last candle retested the midpoint of the third to last candle and consolidated sideways with momentum for a little bit of push. So what we see in that area is a first, second, third, and we have that fourth leg. Let's walk down one more time frame and let's see if we can see that pattern. And we do. So the 1, 2, 3, 4, 5, 6, 7 last candle is a push. 6 last candles a retest. So that's the first leg, second leg, third leg at the midpoint area. And if it pushes up, we do have the engulfment a little bit body towards the second last candle body, but price action hasn't engulfed that second last candle wick to create that W formation or identify that market may push up. So it may just be a reversal in the market. Okay, guys, this is